there! Ready for a wellness adventure? Let's explore the world of health together!
Have you ever wondered why we even have health insurance? It seems complicated, expensive, and sometimes confusing. But at its core, health insurance exists for a very simple reason. Medical care is unpredictable and can be incredibly expensive. Think about it. A single accident, a sudden illness, or a serious diagnosis can lead to hospital stays, surgeries, and treatments that cost more than most people earn in an entire year. Without a system in place, a medical emergency could instantly become a financial disaster for a family. Health insurance was created to solve this very problem. It's a way for a large group of people to share the financial risk, so no single person is left to carry the full, crushing weight of a massive medical bill alone. Essentially, health insurance works by pooling money. Many people pay a smaller, regular amount, called a premium, into a large shared fund. That money is then used to pay for the expensive medical care needed by a few members of the group at any given time. Most people in the group won't need major surgery or a long hospital stay all at once, which is what allows the system to work. It's a form of collective protection, spreading the financial burden across an entire population instead of letting it fall randomly and catastrophically on individuals. To really grasp why this is so important, imagine a world without health insurance. If you needed care, you'd have to pay the full cost right then and there. A routine checkup might be manageable, but what about an emergency? A broken leg from a fall, a severe infection requiring a week in the hospital, or an unexpected diagnosis of a chronic condition like diabetes can generate bills that wipe out savings, exceed your income, and max out any credit you might have. Health insurance is the buffer that prevents a health crisis from immediately turning into a financial one. Now, it's important to understand that health insurance isn't like prepaying for a specific service. When you order groceries online, you know exactly what you're getting. Insurance is different. You aren't paying for a doctor's visit you know you'll have next Tuesday. Instead, you're paying for protection against uncertainty. You're buying financial peace of mind in case you need care that would otherwise be completely unaffordable. This concept of pooled risk only works if lots of people participate, especially healthy people. If only sick individuals signed up for insurance, the costs would be astronomical, and the system would collapse. That's why you often hear about the importance of broad participation. The system relies on a balance. Healthy people who use fewer services help offset the costs for those with significant medical needs. Another huge reason health insurance exists is to improve access to care. When people know they have coverage, they're much more likely to see a doctor early on instead of waiting until a small problem becomes a big, expensive one. Early treatment often prevents conditions from getting worse, which not only leads to better health outcomes but also reduces the long-term strain on the entire healthcare system. Health insurance also brings much-needed structure and predictability to healthcare payments. Hospitals and clinics need a reliable way to get paid for the services they provide. Insurance creates standardized processes for billing, reviewing claims, and making payments. Without it, healthcare providers would face a mountain of unpaid bills and financial instability, making it difficult to keep their doors open. In this way, insurance acts as a stabilizing force for both patients and providers. Of course, this doesn't mean insurance covers every single dollar. Most plans require you to share some of the costs through things like deductibles, copayments, or coinsurance. This is done on purpose. This cost sharing encourages people to think about the services they're reusing and helps keep the system financially sustainable for everyone. It's all about finding a balance. The healthcare market is also not like a typical consumer market. If you have a heart attack, you can't exactly shop around for the best price on emergency surgery. You don't have the time or the leverage. Health insurance helps level the playing field by negotiating prices with hospitals and doctors in advance. This protects patients from facing unpredictable and potentially outrageous prices when they are at their most vulnerable. Historically, as medical technology got better and more effective, it also got more expensive. Modern medicine can do incredible things, but those advancements come at a cost. Health insurance systems grew right alongside these developments. Without insurance, access to life-saving modern healthcare would be limited to only the wealthiest among us. leaving a huge portion of the population behind. This brings us to another key point: reducing inequality. While it's not a perfect solution, having health insurance significantly improves access to care for people with lower incomes compared to a system where everyone has to pay the full cost out of pocket. This is why many governments either provide public insurance programs or regulate private insurance to ensure everyone has access to a basic level of care. Health insurance is also designed for the long haul. Chronic conditions like asthma or heart disease require ongoing management, not just a one-time fix. Insurance supports this continuity of care, allowing patients to get regular checkups, medications, and preventive services that help manage their condition and prevent serious complications down the road. Finally, the existence of health insurance is deeply connected to our public health goals. When more people have access to care, we can detect infectious diseases earlier, vaccination rates go up, and preventable conditions are managed more effectively. Widespread insurance coverage doesn't just benefit individuals. It leads to a healthier population overall. Hospitals, doctors, and medical equipment are all shared, finite resources. Insurance provides a framework to help manage and allocate these resources in a structured and efficient way. So, to sum it all up, health insurance is not just some complicated monthly bill. It's a vital system designed to manage financial risk, improve access to medical care, stabilize the healthcare industry, and protect all of us from the unpredictable and often overwhelming costs of staying healthy. It's a collective agreement to take care of each other when we need it most. Ever wondered how health insurance actually works? It's not just magic money that appears when you get sick. It's a carefully designed financial system that connects you, your doctor, and the insurance company. Let's break it down, step by step, so you can understand what happens to your money and why. First things first, when you sign up for a health insurance plan, you're entering a legal agreement. You agree to pay a regular fee, called a premium, and in return, the insurance company promises to help cover your medical costs under specific conditions. Think of it like a contract. It's not a promise to pay for everything, but a framework for sharing the financial responsibility when you need medical care. So, where do those premium prices come from? Insurers don't just pull numbers out of thin air. They use a process called actuarial analysis. They look at health data from huge groups of people to predict how much money they'll likely need to pay out in claims for the entire group. The goal is to set premiums high enough to cover these expected costs, but low enough to stay affordable. The whole system is built on a simple but powerful idea. Not everyone will need expensive medical care at the same time. The premiums paid by healthy people help cover the costs for those who are sick. Okay, so you've paid your premium. What happens when you actually go to the doctor? This is where the claims process kicks in. After your visit, the hospital or clinic documents everything they did using standardized medical codes. These codes are like a universal language for healthcare. They turn your diagnosis and treatments into a numerical format that any insurance company can understand. Without these codes, processing millions of claims from different providers would be a chaotic mess. Once everything is coded, the provider sends a formal request for payment, called a claim, to your insurance company. The insurer then becomes a detective. They review the claim to make sure everything lines up with your plan's rules. They check things like, was this treatment covered by your plan? Did you get any required pre-authorizations? Was your doctor in your plan's network? This review ensures that payments are made according to the contract you both agreed to. If the claim is approved, the insurer pays a portion of the bill. The rest is your responsibility. This is what we call cost sharing, and it includes things like your deductible, co-payments, and co-insurance. This system isn't there just to annoy you. Health economists explain that it encourages us to be more mindful about using healthcare services. If every single thing were 100% free at the time of use, some people might overuse resources, which would drive up costs for everyone in the long run. Shared payment helps keep the entire system stable. Now, here's a really important part. The insurance company almost never pays the full price the hospital initially bills. Why? Because they negotiate rates with healthcare providers in advance. Think of it as a bulk discount. Because an insurer brings a lot of patients to a hospital, they have the bargaining power to get lower prices. These negotiated rates are usually much lower than the standard prices an uninsured person might be charged. So, being part of an insurance plan gives you access to these lower, pre-negotiated costs. This brings us to the concept of networks. A provider who agrees to accept these negotiated rates becomes part of the insurer's network group. When you visit an in-network doctor or hospital, your costs are generally lower because those pricing agreements are already locked in. Sticking to your network is one of the best ways to control your healthcare expenses. Health insurance also acts as a financial buffer over many years. You might pay premiums for a long time without needing much more than a routine checkup. During that period, your payments are helping to fund the care of others who might be facing a serious illness. Then, if a time comes when you need expensive care yourself, the system is there to support you in return. It's a long-term system of give and take, a community pool of financial risk. It's not designed for short-term profit, but for long-term protection against unpredictable, high costs. Behind the scenes, there's a huge administrative machine at work. Insurance companies have massive systems to process claims, manage payments, and fight fraud. They also have to follow strict government regulations. For instance, regulators require them to keep a certain amount of money in financial reserves. This is a crucial safeguard to make sure they'll always have enough cash on hand to pay future claims, protecting you from an insurer going bankrupt. And the government's role doesn't stop there. Regulations are in place to prevent unfair practices and ensure a certain standard of care. Laws often require insurers to cover a set of essential health benefits, like emergency services, even if you're out of network. These rules shape the entire industry and make sure consumers are protected. What happens in a worst-case scenario, like a truly catastrophic medical event that costs millions? Even insurance companies need insurance. Many purchase something called reinsurance, which is basically insurance for insurance companies. This helps stabilize the whole system by providing a safety net for those extremely rare but incredibly expensive medical cases. Transparency is another key piece of the puzzle. After your claim is processed, you get a document called an explanation of benefits, or EOB. This breaks down what the provider billed, what your insurance paid, and what you owe. Government authorities mandate this so you can double-check everything and make sure your claim was handled correctly. It holds everyone accountable. Of course, this system is always changing. You might notice your premiums go up or down each year. These adjustments are based on real-world data, like rising healthcare costs, new medical technologies, and changes in how much people in your area are using services. It's a dynamic system that has to adapt to the evolving world of medicine. One final critical point to understand. Your insurance company does not make medical decisions for you. Your doctor decides the best course of treatment based on their clinical judgment. The insurer's job is simply to review that treatment and determine if it is covered under the rules of your specific plan. It has a balance between a doctor's medical expertise and the financial and contractual agreement you have with your insurer. So, to wrap it all up, health insurance is a complex but logical structure. It's built on risk pooling, contractual agreements, negotiated prices with provider networks, standardized billing, and government oversight. Each piece works together to achieve one primary goal: to spread financial risk across a large population, making unpredictable and expensive healthcare more manageable for everyone. Have you ever wondered why we even have health insurance? It seems so complicated, right? But when you peel back the layers, you'll see it's not just about paying for doctor visits. It's a massive system designed to keep our whole society healthy and financially stable. Let's break it down. First, think about this. When a lot of people can't afford medical care, it's not just their problem. It becomes everyone's problem. Public health experts tell us that untreated illnesses lead to a less productive workforce, overcrowded emergency rooms, and higher healthcare costs for all of us. So, insurance isn't just a personal safety net. It's a tool for social stability. This brings us to a key idea: individual risk versus population risk. You might think, I'm young and healthy, I probably won't need major medical care. And individually, you might be right. But across millions of people, serious illnesses and accidents are happening every single day. Government health data shows that while a catastrophic event is rare for one person, It's statistically predictable for a large group. Insurance works at this population level. It uses predictable patterns in large groups to cover unpredictable events for individuals. It's like everyone chipping in a little bit to a giant fund. So if someone has a really bad day, the money is there to help them without bankrupting them. They go to the hospital, get treated, but often can't pay the bill, so who pays for it? The hospital might absorb the loss, or more often, they raise prices for everyone else. This is called cost shifting. Insurance systems help prevent this. By creating a structured way for payments to happen, they keep hospitals financially stable and stop the costs from being unfairly passed on to other patients. Health insurance is also crucial for something called continuity of care. This just means being able to see your doctor regularly, follow a treatment plan, and manage long-term conditions like diabetes or heart disease. This leads to much better health outcomes. Without insurance, someone might stop their treatment because it gets too expensive, which can lead to serious complications that are way harder and more costly to fix later on. Things like vaccinations, cancer screenings. It's a win-win. You stay healthier, and the system saves money by catching problems early. Think about it. Finding high blood pressure early and managing it with a cheap medication is far better than waiting for it to cause a heart attack or stroke. Another huge reason for insurance is that healthcare pricing is just weird. It's not like buying a TV. You usually have no idea what a procedure will cost beforehand, especially in an emergency. Health policy experts call this information asymmetry. The doctors and insurance companies know a lot more about the costs than you do. It negotiates prices with hospitals and doctors in advance, creating a set of rules so you're not hit with a shocking, unpredictable bill. Of course, this whole system doesn't just run on its own. It's heavily regulated by the government. There are rules that set minimum coverage standards, protect consumers from unfair practices, and make sure insurance companies actually have the money to pay claims. These regulations exist because healthcare isn't just another product you can choose to buy or not. It's considered essential for public welfare. Insurance also plays a big role in managing public health crises. During an infectious disease outbreak, for example, vaccination and treatment programs that protect all of us, you might also notice that in many places, health insurance is tied to your job. This is mostly a historical thing. In countries like the United States, employer-sponsored plans became a popular way to offer benefits to workers, and that has shaped how the market works today. It shows how deeply insurance is woven into our economic structures. And that brings us to one of the most important functions of insurance, protecting your financial stability. Medical debt is a leading cause of bankruptcy in many countries. A single serious illness can wipe out a family's life savings. Insurance protects you from this by putting a cap on how much you have to pay out of your own pocket in a year. This is called the maximum out-of-pocket. It transforms a potentially infinite, terrifying cost into a defined, manageable amount. It's the ultimate financial protection against the unpredictability of life. By pooling funds from millions of people, insurance creates a reliable payment stream. This allows hospitals and research centers to invest in and adopt the latest medical technologies that save lives and improve our quality of life. It's a complex social and economic engine. It spreads risk, keeps our healthcare system financially stable, promotes preventive care, reduces financial ruin for medical bills, and supports the very infrastructure that keeps us healthy. If you found this helpful, consider liking the video and subscribing for more deep dives into the systems.
Thanks for watching. Hope you liked it.